Hi, it's Edward W. Cotney. This is a chapter review from my first book, Tax Secrets Made Simple. I specialize in working with high net worth families who are ready to pay less tax for the rest of their lives. I wrote this book to help business owners and individuals begin their journey to pay less tax. Let's jump into the next chapter. Hello, this is Ed Cotney, chapter 21 from my book, Tax Secrets Made Simple. Game over. End of life. This is a tough one to talk about, and it's also why it's at the end of my book. We work hard, we save money, we consume, utilize. At some point, there's going to be a distribution phase. You can either make distributions before your death or they're going to happen after your death. And pretty much when we die, it's either going to go to heirs, charity, or the IRS. Sometimes all three. It just depends on what your plan is and how effective you've handled things. What makes it difficult in the planning world, regardless of the profession of the attorney, the accountant, the financial planner, the insurance agent, the banker, the person at the 7-Eleven store, whomever is giving you advice about death and taxes. It's an interesting world we live in right now in respect to how a planner can help advise you about death taxes, commonly called estate taxes. The chart before you shows the history since 1997 of what the lifetime unified credit, in other words, what is the amount at death assets can transfer to my heirs tax-free. Back in the late 1990s, that number was low as $625,000 of your estate per person could go to your heirs estate tax-free. And over time it grew and grew and grew. And then notice in 2010, we had this big red drop. You know, the red line on the chart distinguishes the death tax rate. So again, back in the 90s, when it was only $600-something thousand, every dollar past whatever your lifetime unified credit was, and maybe if you're combined, every dollar past that amount was taxed at 55, let me repeat, 55%. And then it came down a little bit over time as the unified credit went up. 2010, we had a sunset of the estate tax law for that year. So technically it went to zero, but technically it was a modified step up in basis rule. We could talk for 2 days about this issue, but we're not because 2010 is long behind us. 2011, estate tax law came back into being. Nearly $5 million unified credit per person. The death tax rate dropped down. And as you can see in the chart, 2014, the unified credit kept going up a little bit. Notice the death tax rate ended up at about 40% and has stayed at 40% for about the last 10 years. 2018, under the Tax Cuts and Jobs Act, significant, almost doubling of the lifetime unified credit for the death tax deduction. And then here we are in 2023, and I've got that highlighted in big green wide just to make certain we see where we're at. Right now, that number is $12,090,000 per person, almost $13 million basically. And then if we're married, it's nearly $26 million. And it will change again next year because there's an adjusted for inflation calculation in here. And notice in 2026, the big red bar on the right. Unless Congress by 2026 modifies or changes the tax code, if we have another sunset like we did in 2010, we technically, without new law or an extension, which supposedly are going to revert back to the old law before TCJA, which brings the death tax credit down to about $7 million. We don't know what the exact number is because it's an adjusted for inflation calculation as well, but let's just use $7 million, just to use a round number that's within $500,000 of it. What does all this mean? Well, we have a changing environment in respect to how we like to plan our estates, own and control assets while we're alive until we die. Since none of us know the date that God's going to take us off this planet, we need to constantly be thinking about how much wealth am I accruing, and am I accruing wealth in a way that makes sense from a death tax perspective in addition to income tax and asset protection while I'm alive. It's a balancing act. The question becomes, here we are in 2023 with a strong potential that the lifetime unified credit is going to go down to a lower number. Does it make sense for us to use our lifetime unified credit today? I mean, you have that right. You have the right to give away nearly $13 million of your assets to whomever you want to. You just have to claim the gift transfer on your Form 709 as a gift where you have depleted your lifetime unified credit, meaning that when you do die, if you have no lifetime unified credit left, everything in your estate will be subject to estate taxes, subject to whatever rate that is at that time. From a wealth optimization point of view, if you're subject to estate taxes and you know that it's going to be worse in 2026, it may make sense to start using some type of special trust to transfer some assets out of your estate now. Use the lifetime unified credit of nearly $13 million per person now. And this way, when the law changes in 2026, it doesn't matter. Simply, the Treasury is giving you a coupon today that you can use, or you can risk letting it go down to a new number that's lower. That will basically mean your family will have to pay more taxes after you die. Hard to plan for this, but sometimes there are certain ways that you can structure your estate so that you can use the lifetime unified credit for you and your spouse, capture that nearly $13 million of tax efficient wealth transfer to your family, then integrate other tax planning strategies to totally mitigate your estate tax exposure all the way around. The point is, if you're not asking the right questions to the right advisors, you're probably not going to get a good answer. You're not going to be able to plan for the fact that you're probably going to die one day. At least all of my clients pretty much are going to die. I don't have any of them that's going to come back after they die. So this is something where in the planning world, we have to constantly be juggling that act of income tax planning, capital gains tax planning, asset protection, estate tax planning, and wealth transfer to the family in such a way that they're going to be healthy, productive citizens going forward. So this is just a simple chart to try to explain why there's so much confusion. In fact, it may explain why nobody even wants to talk about this topic. But from an estate tax planning point of view, this is a whopper lifetime unified credit that you have at your disposal to use or lose right now while you're alive and you have this capability. So this is Ed Cotney, hoping that you understand that one day it will be over. You will be leaving these assets to your family, either with great control and tax efficiency or as a disaster. Only you can make this wealth transfer a positive, profitable thing for your family. So this is Ed Cotney wishing you to have an excellent estate plan to capitalize on all the assets that are going to go to your family and charities with the most tax efficiency and asset protection. I hope this message from my book, Tax Secrets Made Simple, has inspired you to learn how to pay less tax and enjoy more life. In my videos, I share insights into how to utilize the most generous tax code on the planet, courtesy of the Internal Revenue Service. Please like this video and subscribe to my channel. Visit my website, olympustax.com, to buy my book or contact me. Only you can exercise your right to pay the least amount of tax due. Watch for the next video covering another topic from my book, Tax Secrets Made Simple.